Good morning. This is the market update for buy sell short for Saturday, June 2nd. Ugly day on Friday. The worst point loss we've had this year, 270 plus downside. And of course, the reason being a very bad jobs report, 69,000. Well, I guess 50% under what the market was expecting. And they also chopped another 49,000 jobs from last month's report. So very, very bad economic report. And I actually just read an article. This is probably one of the worst weeks we've seen for economic data in quite a while. We had 21, I believe, economic reports out this week. 19 of them came in under expectations. Very, very bad. There's really only one group of people that are happy with that, and you know who they are, and they are dancing in the streets after these economic reports. And, you know, nothing's really going to come from D.C. with the election coming up and people just focused on, you know, getting in power. To hell with jobs is pretty much going to be the mantra. This week we have Bernanke speaking to the idiots in D.C. where they will grill him about what he is doing to fix the economy. But it's really hard to do anything when you've got the kind of gridlock stupidity we have right now. But they will be grilling him and blaming him. And with the poor performance in the jobs report and the bad economic data we're starting to see roll in and the risk from Europe right now, there is going to be some serious chatter regarding QE3 from the Fed. The next Fed meeting is June 19th and 20th. I would expect them to say they are going to continue Operation Twist, which is expected to end at the end of June. I'd be very surprised if they do not start seriously talking about QE3 because we are getting pretty close, just like last summer, to rolling over again. And with the election coming up and all sorts of other crap out there, we really need to start pumping the spigot. There's an article I posted on the website. Definitely go check it out. Confusion regarding the deficit. You've heard me talking in the chat room about how the morons in DC are totally messing any sort of recovery up. And the reason being, during recessions, especially like the one we've had recently, you spend to get out of it. You do not cut. Read that article. It will tell you exactly why that is the case and why our deficit cutting right now is a terrible thing. And, you know, we're seeing it reflected in the crappy economic data that is coming out. As for the 15-minute chart, steep sell-off. We closed on the lows with everyone running for the hills ahead of the weekend. If we look at the daily chart, big breakdown. You can see on the daily chart we broke the previous lows and just kept going down. Now, if there was a positive to glean from this, it would be that volume did not spike. But you recall when we were looking for that bounce, we didn't get really our bounce back to the 20-day exponential. And we had this little trend line on MACD where we were getting lower lows, but we were spiking, then selling off, spiking, then selling off. We did not even get to a positive MACD cross this time around and are looking to sell off again. And if we continue this trend, could portend some ugliness in the near term. Let's look at a 1-year chart on the Dow. We we slammed through the 200-day moving average on Friday. Really didn't offer much of any support. The last couple of times that we broke through, if we go back to last summer and the debt ceiling crisis, when we slammed through the 200-day moving average, we ended up falling 1,400 points thereafter. The more recent time that we fell through the 200-day moving average was back in the November timeframe, and when we broke through then, we ended up losing, 700 points. Right now, the next real support line on this market is the 11,700 area. 12K, I don't think this is going to offer anything but psychological support, if that. Next real support level would be that 11,700 area. Now, we are deeply oversold, and anything could happen to spike us back up. What I would actually like to see on Monday would be a gap down reversal. You know, we gap down 75, 100 points, and then reverse green and run about 100 points, back above the 200-day moving average. I would view that as a buying signal for funds and traders to start moving back into the market for a decent sized bounce back. I mean, we're down 1,000 points here over the last month. All the indices have gotten decimated. Russell 2K, another close under the 200-day moving average, and this one has some serious downside risk here, even though it is deeply oversold. I keep going back, however, to that VIX monthly chart that I mentioned a couple of weeks ago as our big warning signal. And as you can see, the VIX monthly chart is continuing to break out just like it has this time over the last 2 years, right before significant sell-offs in the market. The top of the VIX bottom indication of the market was when we get into the 40 plus level. If we look at it on a daily chart, we broke above the 200-day moving average. We get into the 30s this upcoming week, and we could see that climactic sell-off that we've been really waiting for, that throw the babies out with the bathwater sell-off that could finally bottom this crappy market for us. Put call ratio, big spike on Friday. No real surprise. We're getting up to that topping zone there. So, what we're looking at going into Monday, gap down sell-off. But, I am going to continue to be all/high cash and just a focus on intraday trading and going home as light as possible nightly, just because the risk reward in holding a lot of these stocks overnight is not there. And a lot of the breakout stocks are not doing it on gaps. They'll dip and then they'll romp. And there actually are stocks that are moving in this market. And, looking over the charts right now, we had a couple of big movers from the popper scam. When the market was down so much on Friday, I ended up just sitting there and watching them break out. Very, very frustrating. I mean, PRKR, even in this bad market, we had a rule of two stock outperform. Broke through $2 and did not stop. Hit the 220 rule of two target just like that. And look at the intraday low candle. $1.70 after the open. Closed at 220. No news, big volume. That's a 50 cent. That's a 25% move intraday. And rule of two worked to a T on this one. Popper scam play, ANTH. I watched this one break through. I've been watching this one really for the last month. It's been on the popper scan a few times over the last few days, waiting for that breakout through the 2 level and through the 50-day moving average. And late in the day, when the market was making its move to the new lows, this stock went boom and hit the 220 target on the nose. So there are stocks out there that are moving. I guess we just need some balls and tight stops to play them, or you just sit back. But, a positive is some of these stocks are starting to move, and there are a couple of nice plays on the pop scan going into Monday. One I'm going to quickly mention is PSUN, Pacific Sunwear. This one actually broke out nicely on the open, and in the first hour of the day, it got all the way up to that 160 level, and then retreated again, on the weight of the market. A bounce back in the market sometime this week, and this is definitely a stock to check out. We've got a very nice flag formation, nice breakout move here. The chart indicators look very good on bounce volume, etc. A lot of these charts, they're acting strong in a very, very bad market, which means we have to pay close attention to them whenever we see any sort of rebound in the overall market. So this is definitely one to check out, and there's a couple other nice ones in the pop scan to look at as well. As for short plays, there's a high risk of shorting, even though there is the potential for another breakdown move in the market. There are a couple of short plays on the pop scan now nightly. They're at the bottom of the list. What I would suggest is keeping very, very tight stops on these, because what will happen, it may happen Monday or Tuesday. It may not happen for a week, but it will happen where you will just see the market out of the blue reverse course big time. Now, we'll probably see some sort of run up into Bernanke's testimony to the idiots in DC this week. There's going to expect a lot of chatter regarding QE3. Remember, one of the most important metrics that the Fed is looking at right now is employment, and the employment is starting to suck, and it's sucking irregardless to what's going on in Europe. So Europe is that other risk that's out there. And the crazy thing is, the sell-off that we had over the last couple of days, Europe was sort of an afterthought. But a big market sell-off like this, typically we see some sort of stabilization on Monday. Any sort of gap down on Monday, I'd probably be looking to pick up some large cap plays, maybe some SPY calls for a fast little turnaround. But half positions only would be the stance I would take this week. And just be safe out there. Ugly market. Selling may go away so far. Is holding to course, but we still have not seen a decent sized bounce back. Is it going to come here, or is it going to come down here? We'll find out really, really soon. So that's it for the video. If you've got any questions, shoot me an email, feedback, buysellshort.com or .net. Otherwise, I will see you guys in the chat room on Monday. Goodbye.